Hi, I'm Martin Frick, CEO at Moneythor, and welcome to the Deep Banking podcast. I'm very pleased to welcome Diana Papadopoulos from Booster on our call today. Maybe you want to introduce yourself and Booster to our listeners first.
Thanks, Martin. Great to be here today. Yes, I'm joining you from New Zealand. Booster is a fund manager based here in New Zealand, and really what we are focused on is helping to build the financial resilience of Kiwis. So we do that in a variety of ways, primarily through long-term savings, so people saving for their retirements, but we also try to branch out wider than that and think about how we might get people to that long-term saving state. And in recent years, we have moved into other areas such as offering a debit card, just to really bridge that gap between the long term and the here and now.
Now, you're not a classical retail bank, I dare to say, so you have a little bit another core business. So what made you dive into that space that offers more retail services? What motivated you as Booster to do that?
Yeah, absolutely. So we are certainly not a retail bank. We're not a bank at all. We're an investment manager. However, what we learnt in our time serving clients is that there are some needs that people have, which we were able to serve through our skill set and our capabilities as a fund manager. And we thought we could do it a little bit differently and still lead to some really, really good outcomes for clients. And we think better outcomes than the products that were available to them in the market at the time. So that's why we jumped on board.
There's actually a lot of, let's say, non-financial service providers that start offering financial services. You are in financial services, of course, just with a more investment-focused approach. But still, do you see a change in the environment happening that even people like you are now focusing on offering retail products and also start rewarding clients differently than in the past? Is this also driven by changes in the environment you're noticing?
My perspective is that it's not unique to have what I'd call kind of non-institutional players providing services to the retail client. I think what I've seen change is how we go about reaching those customers. So Boost is a really good example of that. We've been doing what we do for 25 years. But when we started, in order to reach scale, you really probably needed a branch presence in every town across the nation. The world has changed so dramatically since then, and what digital channels allow us, and I think other players that are entering the market to do, is reach that wider market far more effectively and far more precisely. And so I think it's been a really exciting time in terms of seeing that real evolution of the different organizations that are in the market trying to serve those needs.
Actually, you bring up a very valid point. Digital makes it easier to reach people, but I guess it makes it to a degree also more difficult to differentiate your offering. So how do you differentiate from all the others that try to reach all your potential clients over digital channels now?
Yeah, I think it's actually a great thing. It keeps us on our toes. And really, in terms of differentiating, I think it's about really understanding what those pain points are and making sure that you are finding a different and unique way to meet them in the best way possible. If you can zone in on that, that tends to be the key to success there.
So you were mentioning before that it leads to better outcomes for your clients. Now, how do I need to understand this statement? Is it better financial outcomes? Is it a more rewarding journey? Do I get some rewards when I'm a loyal client? Or how do I need to interpret your statement?
Yeah, I think that's a great question because different people see good outcomes in different ways. I think given the business that we're in, it has to be a better financial outcome. But then there's also those more intangible outcomes, which are about the experience, the engagement. But I think it's really important that we consider both of those, because in my view, you don't get those great financial outcomes if you haven't delivered those engagement outcomes along the way, or at least it's a lot harder.
Yeah. Are you also offering gamification experiences to your clients? Because we saw this in other regions being very attractive. You can combine rewards, loyalty with gamification.
Yeah, so a lot of our features are very much based around trying to bring in that idea of gamification and how we make your finances fun. So, one of the smallest kind of features, but has been incredibly powerful for us, is giving clients the ability to boost their transaction, so rounding up to the nearest dollar, and then trying to beat their own score month on month. And those very, very simple behavioral techniques have been very effective in helping people to save.
Yeah, I think that's a very interesting point, because a lot of savings investment there's a lot of behavioral science involved, that people not always do the logical thing. But I think if it's easy accessible, like rounding up to the next dollar, I'm fully with you. This could make a difference, I guess. So you're saying we offer a better journey for our clients. We motivate them to save through little gamification and so on. Did it also help you to attract new segments that maybe wouldn't have you as their first choice?
Yeah, I think the area that we have gone into has been really very interesting in terms of who we are attracting, because it probably isn't what you would assume. So we have a debit card product that is very, very much targeted at digital natives, and it's allowing them to invest, but really, really carefully manage their finances on a day-to-day basis with budgeting tools built in, the whole shebang. What we have found, though, is that there is another group of people that maybe wouldn't be the obvious kind of target, and that's retirees. And they're saying, well, you're giving me a product where I can invest, but I can still have my cash accessible and be at the shop spending or paying bills when I need to. And so it's been really interesting in terms of how one solution can help to meet the needs of very different target markets.
I hear this so often in this podcast and also when I'm traveling around visiting clients, that you have a plan for a certain segment and then something else pops up that you have never thought about, that you attract people. The gamification is a good example. A lot of people implement gamification for a young audience, but then they find out all the guys playing the games are the retirees. So it's another example. Now this leads me to my next question. We as in the financial industry, that at least the way I grew up, we were always thinking about big, broad client segments. So we have certain segments, certain age groups, certain wealth, whatever, and now everyone is talking about the segment of one coming from the more consumer-based industries like Netflix and so on. Are you also, with this new technology, did you change your thinking around segments, or how do you see that?
Yeah, I think this is an area where the financial services sector is still relatively immature in the way that we're approaching it. And the way I would probably describe it is that, if you were to pick up somebody else's TikTok feed, there's that feeling that it's so foreign because it looks so very different to your feed. I think that most financial services experiences right now are so many, many, many miles away from delivering that level of personalisation. However, the tools and the tech are coming through now that is going to allow us to deliver that level of customisation. And I think that is a really, really exciting time and journey to be on.
Do you think it's a tech problem or is it a mindset problem?
Well, I think there's probably a data problem
Mhm.
and that there is a lot of organizations that struggle with siloed data sets. But to your point, what we're seeing now is a lot of enablers that are helping us to access that data, regardless of where it might sit, and bring together a really cohesive experience. And so really, I think we'll see that starting to change pretty rapidly as everyone wraps their mind around how that might be delivered.
Okay. I think this slowly leads us on the territory of technology and AI. Of course, I have to bring it up. Everyone is talking about AI. How are you using AI to make more sense of data you already have? What are your plans? Do you see this beneficial for you, or how do you look at it in Booster?
So how are we using it? Very carefully right now. And I think we are, like many financial institutions, very aware of the risks as well as the rewards. So at the moment, we're very much still in an exploration phase around how do we retain the data sovereignty that's really important to us, make sure that we have got all of those protections in place while still really getting the full potential out of what AI can deliver. I guess right now I see a lot of shiny objects in this space. And I think the real work to be done is understanding where those true value drivers are. But I'm very, very certain that we will get an exponential delivery of value out of the tools that we're currently using.
Yeah, I think you're in good company here because a lot of financial institutions are handling it carefully. But some of them started to make more use of it internally. So they use AI to better equip their own staff with information about clients and so on. And everyone is a bit hesitant to open it directly or expose the consumers, the end clients, to AI. But are there also areas where you use it internally already to make your life easier in Booster?
Yeah, absolutely. I think one area which is pretty common is in our development team. Our engineers are working very hard, and as every organization faces the same challenge, there's always far more to be done than there are resources on the ground to deliver it. So that's really helped in terms of productivity for the engineers that are on the tools doing the job. I think, though, some of the great areas where we're seeing the team starting to see the potential is one in prototyping. So how does a group of people stand around an idea in the morning and by the afternoon get to a point where you can have a working prototype and start that translation journey into a deployable product? And I think that's where right now I'm seeing the greatest efficiency benefits.
Yeah, we're using similar technology in our environment. We call it a code sidekick. It helps generate code to make the creation of new user journeys more efficient. And I think I agree with you. A lot of AI is very useful right now in efficiency gains. But I think we haven't really cracked make better use of existing data yet. I think everyone is exploring stuff, but I think it's still a pretty siloed approach in my view. So what is next for Booster? What is your big thing you have on the agenda when it comes to creating deeper relationships with your clients?
So we have a very, very kind of long-term outlook when we come to helping our clients. Many of our clients will be with us from their first job through to the day that they retire and then through that retirement journey. And so for us, what we're really looking at is how we join together all of those life stages and make that a really seamless approach so that it's not, I've started my first job, I need a transactional account. Now I'm saving, I need a different account for my investments. Now I'm getting towards retirement, I need a different solution. It's about bringing that all together in terms of an experience that follows people through those life stages and flexes to fit around them. So that means bringing together transactional products. It means bringing together long-term investment schemes and breaking down some of those traditional barriers, which would have seen those sitting, to your point, in silos, and bringing that all together in a package that helps people see what the long term looks like for them.
Okay, this sounds to me as let's assume I'm a client of yours, like a more seamless experience. So I don't need to sign up for new products and things all the time, but I can expect you to offer me what I need if at a certain life stage, whether it's a cool loan, whether it's a mortgage, whatever. But given your business, I assume this also means partnering with others. I don't assume you will offer all these products yourself. Am I correct in this assumption?
Yeah, and I think you're seeing that across the industry right now, and I think it's really helping in terms of consumer choice, in that not every product needs to be created by the organization that is delivering it. And so we're seeing really great partnerships coming together. One entity might hold the customer base, another might have a great solution. And I think that's where, the mechanisms by which we deliver these products are going to look different, but we're already seeing a much stronger approach to partnership in terms of how we serve our customers.
So how do you look at partnership? The way we define deep banking, we say it's highly personalized, it's proactive, and it's beyond banking. So when you're saying partnerships, are you also looking at partners beyond banking? So, for example, I wanna have my first car or I can partner with someone who can offer me a car in your network, or how do you look at partnering? Is it a more narrow financial focus, or is it a broader focus?
So partnership to me has to be centered around what the customer's needs are. And given the space we play in, a lot of those are going to be financial needs. But the thing with your finances is they touch on every single aspect of your life. So one of the key partners that we work with are financial advisors. And so that is a really, really crucial relationship that we see in terms of connecting with that end customer. But likewise, I think there's some really interesting areas to explore, which are cross-channel, cutting into other categories, and there's some really, I think, value that can be delivered to customers. For example, between a merchant partnership with the likes of a product like ours.
Yeah, we see this a lot happening with our clients, that they use their own merchant networks to create experiences that go beyond banking. I think that's the easiest step to do, I guess, from our perspective, because it offers services that are beneficial to you because it creates a better relationship with your merchants, but are also beneficial for the end client. So talking about merchants, very often rewards come into play then. But because you're playing such a long game, I guess instant rewarding of transactions and so on is not something that is very high on your agenda.
Yeah, and this is an interesting one because we have done a fair bit of customer engagement around rewards and where people see that value. And without a doubt, customers love the idea of some kind of reward, be that a cashback or some other kind of points-based mechanism. On the other hand, what we always hear from customers is, I want the best deal possible. And so we're saying, how do we bring these two things together so we are delivering to you the best return into your account, but also trying to help you to link towards these rewards? Right now, we would say for our customer base, those that are spending on our debit card and earning a really, really sharp rate of return on that are seeing that as the ultimate reward. And so what they're saying is, I just want to put more into my account so I can generate that return. And that is playing forward as an incredibly powerful reward.
Yeah, I think that makes the most sense given your business model. It's all about compounding in the end until you retire, and I think that's very beneficial for a client if you think along that lines as well. Now, we took a journey together from you explaining your business, from the change, how digital changed the way you can approach clients, but also the way you maybe compete with other people. We talked about technology, we talked about reward journeys. Anything I forgot to ask you and you would like to mention?
If there's one thing that I've observed that would be interesting to comment on is what I'm seeing in the local market in terms of where some of these non-traditional providers are playing. We are quite lucky in that we have an investment vehicle that is focused on very, very early stage tech. And so through the partnerships that we have in that investment vehicle, we get to see some really great technologies emerging. And quite recently, we supported a Fintech accelerator, and there were 14 companies that came through in that cohort. What was really, really pleasing to me was to see that across those 14 companies, the range of solutions and ideas was so very, very wide. So everything from motivational, gamified personal finance through to collective savings tools, through to helping people to invest in offshore markets. But there were some common themes, I think, that cut across all of these innovations. So one is providing access. And I think for most consumers, what they're looking for is access to something or some kind of solution that in the past maybe wasn't available because, hey, you either needed to be a big time investor or you needed to pay a significant fee in order to access that kind of service. And it's really great to see that those barriers are just being broken down time and time again by the fintechs coming through. The other thing, though, that I think is just defining is experience. It is all about the experience. You have a group of customers today that demand and expect a level of experience, and we've got these great fintechs coming through that really understand that and are putting that at the forefront of their offering. And so I'm really interested to see where that goes. I think we will see an almost a disaggregation with so many of these amazing kind of services hitting the market over the next 5 to 10 years. And then it'll be interesting to see where it goes from there. Do they come back together in some kind of form of aggregation? Or do users start to become more comfortable with having multiple providers for different services?
I dare to have a thesis here. I think in the end it will come back to aggregation, because there's a lot of fintech or also digital banks and everything popping up, and they give you good experience, but usually in a very limited area. And in the end, it always comes back to who is the guy I trust to maybe make more use of a certain good offering. If I get access to other financial products in your case, then, for example, I'm just making an example here. I get access to products they offer me in the Hong Kong market. Sitting in New Zealand, I maybe don't know, should I trust these guys or not? But if I get the stamp by Booster, that's a good thing, then I maybe do it. So I think aggregators still play a huge role because of this trust element, which is super important in the industry we are in. So I dare to say that it will aggregate over time again.
Yeah, and my suspicion is that you're right. What I see is that there's a lot of the services coming through are, to your point, very, very focused on one particular pain point and solve those incredibly well. Convenience, though, is something which we hear time and time again in terms of people only have so much mental mind space. And so when you can bring those pain points together and solve them all in one place, that tends to trump all else. So I expect that we'll see that coming back together.
So you were mentioning mindset before, so you have been in this traditional long-term core business of saving for your retirement. And then you go down the debit card experience route, which is very transactional and very immediate. So how did you motivate your team, or how did you change the mindset of your team to think differently?
So that wasn't particularly difficult. And the reason for that, I believe, is that the team here at Booster are incredibly aligned around our purpose. And that purpose is helping Kiwis to build their financial resilience. And so when you take that as your start point, you might have a particular range of products that you provide, but your thinking is never constrained to that being the only way in which we go about helping our customers. And so prior to launching our debit card, we had built a budgeting tool, effectively a PFM. That was, again, very far from our core business, but the team here could see the linkage between how helping people to get on top of their daily budget helped them with the longer term. Sure, sometimes these things are a risk, but when you get in there and give it a go, it's incredibly motivating. The team build energy from that. And then when we decided to tackle the debit card project, we knew it wouldn't be easy, but we were really, really aligned and clear on how that was going to help people in the long term. And so it was very easy to get the motivation wrapped around doing something new.
To me, this sounds like a very customer-centric approach. Now, of course, every bank I would ever ask and talk to, they would say we are very customer-centric, but my personal experience is very different, I have to tell you. And so how do you create this really customer-centric mindset in a financial organization? What do you do different in Booster?
I think the key comes down to your culture. And our culture is one that is very much centered on the idea that we do not exist if we are not solving a problem for our client. And so we are always coming back to the reason that we exist. And without a doubt, we have to be very, very sharp on all of the technical aspects of delivering financial products. But the thing is, you can do that anywhere. There are plenty of organizations delivering financial products. The reason people want to come and work at Booster, and the reason we exist, is we think that there's more to it than just that technical side of things. The thing that gets us out of bed in the morning is the idea that real people are getting real outcomes and living better lives as a result of what we do.
Okay, this sounds like a great culture to be in. Is it when you look at the way I understand the KiwiSaver market, and I'm actually not too familiar with it, but as a client, as a consumer, I have limited choice what I can do really in KiwiSavers. And so your other organizations providing the same services, do they tend to be bigger than you? Are you one of the smaller players? So size makes it easier for you to be agile, or how do you see that?
So we would be at the more niche end of the KiwiSaver market. So there's actually a huge amount of choice in the KiwiSaver market. I've lost count, but there's probably 25 different providers of KiwiSaver funds out there. A lot of the market absolutely is dominated by the big banks, where people have got a transactional account and they have tacked on their KiwiSaver account there as well. We play at the end of the market where it's about really differentiating ourselves, showing what we're about, and the fact that we're delivering that extra value. And that really helps to attract a team that works here that are really, really keen to push hard and do that little bit more for the customer.
So this really keeps you on your toes, that you need to compete with the big guys.
Yeah, it does. And I think that's the great thing about being a more agile competitor in a market is, you never rest on your laurels. You're always pushing forward, thinking about what you can do next and how you can really demonstrate your value to the customer.
Where do you really think you differentiate compared to the big guys? Don't want to go into competitor bashing or something like this, but what is it really? Because I assume if you're a ANZ or whatever, then you cannot differentiate on trust, because these are very solid institutions. They've been there for more or less ever. So is it agility that you are better, or is it a more variety of products? Is it the experience with your advisors or your app, or where do you think you differentiate the most?
It's always a combination of things, but I think there is one thing that we have always believed to be true, and our customers continue to tell us it's true, which is that they really love and expect amazing digital experiences. But when it comes to your money, when you need an answer to a question and you need it now, you still want to be able to pick up the phone and call somebody and have a real person answer the phone and help you through that. And so when a customer rings us, we answer that phone within 30 seconds, and you have one of our team that's sitting here in the office with us helping customers when they need it. And I think it's those kinds of things that are real differentiators still in an increasingly digital world.
Oh, I love to hear that. I recently was victim of a chatbot in one of the banks I'm dealing with. I cannot call myself other than a victim, didn't solve any problem I ever had. And in the end, I tried for 3-4 days to reach my bank to solve the problem, because there was no other way. It was a horrible experience. But of course, I also understand that it's not the cheapest way of providing support to have people answering calls. Are you also planning to maybe find a blend between using conversational AI techniques and phone support? Or are you saying this human being element is so core to our experience, we want to keep that?
So AI will absolutely do a lot of the heavy lifting in terms of customer inquiries and servicing, without a doubt. There is always going to be, though, I believe, the 2% of situations where somebody just wants to be able to talk face-to-face with a human. And it's in those moments that it really matters. Because honestly, I don't really want to talk to somebody most of the time when I'm going about my life. I can do it far more efficiently through the digital tools that organizations are providing. And, that's our aspiration as well. But we don't want that to be the end of the experience. We want to always have that human touch, so that when you have those moments where you just need to talk to somebody, we will be there.
I think that's excellent. That's exactly, I share your view, because you always have this one problem that no AI can ever solve. And I think a blend between using new technologies, but in the end having a human being, I think is a great way of supporting your clients. I'm fully with you. So we have been touching on trust before, and for a traditional bank, I guess it's easy to be trusted because they have been around for a long time. They have gone through many cycles of crisis. Many of them are government-backed, explicitly or implicitly. So there's a lot of trust around these banks. Now, if I'm a new provider of some financial service, how do I earn this trust? Because I don't have the big balance sheet, I don't have the government support. So what are good ways of earning trust from consumers?
Yeah, I think trust is one of those things that is very hard earned, but very easily lost. And particularly when you are a new or slightly different player in the market, that question of trust is even more important. In my experience, I would say that having a very, very clear purpose, a reason why you are providing the service you provide, and articulating that really, really clearly as what your promise to the client is incredibly important. And then making sure that your delivery matches that promise. And through that credibility building process of being very clear in terms of what your customers can expect from you, and then making sure you deliver that every single time, I think that is the key for the non-traditional players in terms of building trust. And then once you have got confidence that you are delivering in that way, it is all about social proof. You become incredibly reliant, I believe, on your customers advocating for the experience that they've had with you. And that's an organic process, and it does take time, but it is absolutely worth the effort.
But I think that's sometimes a difficult balance to strike, because in my view, we are living a little bit in a world of over-promising and under-delivering. So if I'm a new startup now, on one hand, I need to get through the noise, because I guess the English language doesn't have enough superlatives any longer. Everything is the best, the greatest, the latest, whatever. So I want to go through the noise, but on the other hand, I don't want to overpromise. So not an easy balance to strike, isn't it?
No, it's not an easy balance at all, and that is where I think it is very easy to promise the world and then have customers feeling underwhelmed with what you've delivered.
You were also mentioning a kind of social, I'm not sure whether I use the exact term, but kind of social benchmarking. So your peers or other consumers rate you, kind of thing. Are you using this in Booster as well, that clients rate you somewhere? Or if I need to make a choice where I put my money, how do I find out whether Booster is a good thing or not?
Yeah, so we actually use a little bit of Moneythor functionality in order to help our clients make referrals to their friends and families. And that has been a very, very powerful tool for us in terms of embedding that referral behavior into the experience. And at the moment in which a client is thinking about how much they are enjoying the return being paid into their account or whatever it might be, that referral mechanism is sitting right there. And that for us is a really powerful way to continue to build that social network effect.
I think this became more and more important, referrals, because when you as a layman, if you get the traditional prospect telling you how great the product is, all the returns in the past, anticipating in the future, I think you simply get lost, and they all look very similar and comparable because no bank will show you the worst performing product anyway. So I think referrals make a lot of difference. And I think, do you think this is something that we have taken over from the consumer industry and now are applying in our environment as well?
Absolutely. We see that for the new customers that join us, the biggest reason that they come to us, far superseding any other reason, is the referral or the advice of a close family member or friend. And so that is something that the consumer goods industry has understood for a long time. Makes sense that, of course, it's even more important when you're talking about your money, that you're putting it somewhere that you trust. And so being able to help to facilitate those conversations, because particularly in New Zealand, money is not necessarily a comfortable subject to talk about. And so creating mechanisms which help people to share through an experience that's built into their financial app is a really important way for us to kind of help to drive that behavior that might not necessarily be super comfortable around a dinner table conversation.
Can you make us an example for such an experience they can share or refer to?
Yeah, absolutely. So in our debit card app, we have an insights feed. As people are scrolling through that feed, they will have a prompt to think about referring to a friend. At times, we might run a promotional mechanic alongside that where there is some kind of reward mechanism, tickets to a festival. Other times, we might not have that promotional aspect sitting alongside it. Regardless of how we're running that, people just will click on that little link and it'll power off their choice of email or WhatsApp message with some pre-populated content that they can share with their friend about their experience in our debit card.
Yeah, this looks to me very close to experiences you have on social media, where you can share stuff you pops up there, and I think that's a very good approach. Excellent. So thank you, Diana, for being part of our podcast, and it was very interesting to listening to your journey in and with boosters. So thank you very much for that.
All right, thank you. It's been great.